What's up everyone, and welcome back to Explain the Charts. Today is October 20th, 2025, and we're taking a hard look at Bitcoin after a week of extreme volatility and fear in the market. First, we'll cover the crucial news events driving the price, and then we'll dive deep into the charts to see what they're telling us. The biggest story has been the massive market sell-off, which saw Bitcoin plummet from its recent all-time high above $126,000. This crash was largely triggered by President Trump's tariff threats against China, sparking a classic risk-off mood across all financial markets. This led to a historic liquidation event, with reports showing over $8 billion and later over $19 billion in leveraged long positions being wiped out across the crypto market. Adding to the bearish pressure, we've seen substantial outflows from spot Bitcoin ETFs. Specifically, the ARK-21 shares and Fidelity ETFs saw hundreds of millions of dollars pulled out, signaling that institutional sentiment has soured in the short term. Interestingly, comments from Fed Chair Jerome Powell hinting at the end of quantitative tightening failed to provide any relief for Bitcoin. This suggests that immediate market fear, driven by geopolitical and liquidation events, is currently outweighing potentially bullish long-term macro factors like improving liquidity. Now, let's switch over to the daily chart to see how these events have been reflected in the price action. Looking at the bigger picture on the daily chart, we can see the incredible run-up that started in mid-2024 and culminated in the peak above $126,000 on October 6th. What followed was a swift and brutal rejection from those highs. The candle for October 10th is particularly telling. It shows a massive drop with a long lower wick, indicating a flash crash down to the $102,000 to $103,000 area before finding some buyers. This sharp decline directly correlates with the tariff news and the ensuing market panic. This plunge has established some very clear and important levels for us to watch. The all-time high of $126,000 now stands as the ultimate resistance level that bulls will need to overcome to signal a full trend reversal. On the downside, the area between $100,000 and $105,000 has emerged as a critical support zone. We saw price bounce aggressively from this area during the worst of the sell-off, making it a key psychological and technical floor. If that support were to fail, the next major area to watch would be the consolidation zone from late 2024, roughly between $95,000 and $98,000. Currently, the price is struggling to recover, facing immediate resistance around the $110,000 to $113,000 level, which was the closing price on the day of the initial big crash. Let's zoom in on the daily chart to get a clearer view of this recent, chaotic price action since September. Here you can see the parabolic move up to the highs, followed by the sheer vertical drop. Notice the significant increase in volume on the large red candles on October 10th and again around October 17th. This high volume confirms that the selling was driven by conviction and panic, not just a minor pullback. Following the initial crash, the price has been consolidating in a wide range, showing a state of indecision in the market. The bounce from the lows has been relatively weak and on lower volume, which is a point of concern for bulls. It suggests that sellers are still in control and are capping any significant recovery attempts. The price is currently hovering around $108,600, caught between the recent lows and the first major resistance. Now, let's drop down to the 1-hour chart to analyze this consolidation range more closely. Over the past week or so, Bitcoin has been trading in a fairly well-defined range, roughly between $105,000 on the low end and about $116,000 on the high end. This sideways chop is typical after a major trend move, as the market tries to find its footing. Bulls and bears are fighting for control, with buyers defending the support at $105,000 and sellers defending the resistance at $116,000. Any break above or below this range will likely dictate the market's next significant move. Looking at the past 48 hours, we can see a pattern of lower highs and lower lows developing within this larger range. Price fell from near $110,000 down to $106,000 before staging a modest recovery. This short-term bearish structure suggests that sellers are still applying pressure and that a retest of the range lows is possible. Finally, a quick look at the 15-minute chart gives us an intraday perspective. This time frame is most useful for short-term traders looking for entry and exit signals. We can see the bounce from the $106,000 that occurred on October 19th in fine detail. However, notice that the volume during this recent push-up is not particularly impressive compared to the volume seen on the prior drops. This again hints that the current upward momentum may be weak. For day traders, the key levels to watch are the recent local high around $109,600 and the low around $106,000. A firm break of one of these levels on high volume could signal the direction for the rest of the trading session. So, to recap everything and look ahead, let's return to the daily chart. The market is at a critical inflection point, sitting on major support. The key levels to watch are major support at the $100,000 to $105,000 zone and major resistance at the $116,000 level, which marks the top of our current range. Let's outline the potential scenarios. First, the bearish case, which I believe has about a 60% probability right now. Given the severe technical breakdown and the fearful macro environment, the path of least resistance appears to be downward. If Bitcoin fails to reclaim $116,000 and breaks below the $105,000 support, we are very likely to see another wave of selling. This would open the door to our next major support area around $95,000 to $98,000. Continued large outflows from the ETFs would be a strong confirmation of this bearish trend. Now for the bullish case, which I'd place at a 40% probability. For this to play out, Bitcoin must hold the $105,000 support level firmly. A decisive break and hold above the $116,000 resistance would be the first major bullish signal, suggesting a short-term bottom is in. This scenario would be reinforced by a shift in the news cycle, such as a de-escalation in the US-China trade war or a sudden reversal to inflows for the spot ETFs. Keep a close eye on those ETF flow numbers, as they are a great indicator of institutional sentiment. Also, pay attention to any further statements from the Federal Reserve or developments in global politics, as they will undoubtedly continue to impact the market. Thank you for tuning in to Explain the Charts. We hope this analysis gives you a clearer picture of the current state of Bitcoin. Please remember that this content is for informational purposes only and is not financial advice. Always conduct your own research and analysis before making any investment decisions. Don't forget to like this video and subscribe to the channel for more in-depth market breakdowns.